Hello everyone, it's Shea from the LifeWealth group. Just going to give you a quick market update and also what we're doing to help our clients pivot through these times of uncertainty. Well, last week we did bring investors much needed relief. After 7 weeks of declines, the S&P managed once again to avoid bear territory. The longest losing streak for the S&P 500 in over 20 years, with energy stocks performing particularly well. Are we seeing signs that inflationary pressure has peaked? Well, let's hope so, but it's still early days yet. As markets opened on Tuesday, stocks started to give up some of those gains that we'd experienced at the end of the week before. Comments from the Federal Open Market Committee didn't surprise anybody at all. They're trying to stabilize this cool off this racing economy, inflation and prices. All members voiced support for raising interest rates again, with 50 basis point rate planned increase over the next few meetings. Again, they're trying to bring interest rates to a neutral level that neither inhibits nor stimulates economic growth. Further quantitative tightening is also on the cards as the Fed's attempt to reduce the money supply. You've been used to hearing quantitative easing, where we're throwing money at the economy to stimulate spending, stimulate growth. But now we're trying to bring some of that money out of the economy. So quantitative tightening is the opposite to quantitative easing. It's where we try to stave off inflation by reducing the money supply. We've been in an environment, as I said, for quantitative easing for so long. It's time to tighten the money supply again. New homes continue to drop. April posted their biggest monthly drop in 9 years. It's the latest sign that higher interest rates are reducing buyer demand. It represented a drop of almost 20%, 27% from a year ago. That's been a big issue for new home buyers, but we're seeing it slow down a little bit. We also saw positive earnings from some of the higher end retailers, such as Nordstrom's and Macy's. And on the opposite end of this scale, we saw Dollar Tree and Dollar General do really well, and they posted optimistic earnings. It seems earnings do drive the market, so we're always looking for good earnings. If we can get that, that's always good news for the markets. Also doing well was the movie theater AMC. Their shares saw a 10% increase following the release of Top Gun, the movie, over the Memorial weekend. I hope many of you got to see it. I did not, but I hear it's a very, very good movie, and a lot of people are enjoying it. We also saw good news on the unemployment front. On the jobs front, unemployment benefits fell last week again, hovering near historic lows. It's a sign that we have a very tight labor market here in the US. We continue to see demand for workers increase. This is good news for the Fed. It was one of the reasons they held off raising interest rates for so long. They wanted to be sure we had a strong enough labor market to withstand the pressure. So as long as Americans are working, there's cash reserves in the bank, corporations have cash reserves, and we're all better positioned to withstand the inevitable economic slowdown. So far, analysts are even starting to back away from their concerns. They were forecasting a recession. Now they're saying maybe we won't see a recession, hopefully in the next 2 years, but more forecasting a slowdown, an economic slowdown rather than an economic collapse. So once again, we eagerly await May's employment and CPI reports to see if the labor market continues to strengthen, to see which direction prices are moving. Are they increasing or not? The jobs report is due out Friday, and the CPI report is set for release the following Friday. These are all signs where we're having to slow the economy down because of inflation, which means we do anticipate slower growth. So what do we do in situations like this? Well, I remember when I first got into the industry, one of my mentors in the industry saying, look, wealth is not lost. It just simply changes hands. There are opportunities to be found in any market conditions. So during these times of economic uncertainty, where are there opportunities? If you can position yourself defensively, to fit the environment you're in, then you can do a lot better. One of the things we're seeing is something called our US Unique Possibilities. This is a portfolio of stocks where we look for opportunities in this particular current environment, such as energy and infrastructure. And that's where we see you can still take advantage of what's going on despite the downturn in other areas of the economy. Also, another strategy you can use is a good dividend pay stock. A stock portfolio that pays good dividends. When you have yield or income being generated, that's one way you can help grow your accounts. The other thing I want to remind you of is, could this be a good time for a Roth conversion for you? Does it make sense while your portfolio value is down? Is that a good time to convert? Because you would be converting and paying taxes on a cheaper balance, a lower balance. It would be cheaper for you. Then when the markets recover, you recover in a Roth environment and take all that growth tax free. So that's a great strategy to be thinking about in these times. We realize you're all unique. Everybody's situation is different, but is there something that's relevant to you? Well, if you want us to take a look, just encourage you to reach out, give our office a call, 407-299-4129. We're making available 15-minute opportunities to do a quick glance, a quick look at see if there's any pivoting we can do that you could benefit from. Other than that, we ask you to just remember that there were tools included in your plan, that the real key to having to feeling less concerned during this time is having a plan, knowing your plan, having tools in that plan that prepared you ahead of time for when we would hit market downturns as well as market upturns. You want to take advantage of both the growth and the cycles of the market. So being fully position for either which way it goes is always the best way to be. But in the meantime, check us out at the LifeWealthGroup.org or give us a call or email. Again, it's 407-299-4129. We'd love to hear from you and see what we can do to make sure you're positioned as well as you could be. Have a good week, everybody.